registration granted by SEBI, enlistment with BSc, SIA and RA, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors.
Hi, I'm Andrea Ribello, CEO of Equity Master. Before we begin today's small cap proxy players briefing, I want to talk briefly about something that's probably on many investors' minds right now: the global situation. It feels like we had barely taken a breather from tariff shocks, and now we find ourselves dealing with the consequences of a war in the Middle East. For India, that matters. We rely heavily on oil and gas imports from the region, and we have deep trade links there as well. So, whenever tensions escalate, the ripple effects reach our economy fairly quickly. And naturally, the markets begin to reflect that. The Sensex has slipped from its recent highs. Technically, we're not in market crash territory yet, but the headline index doesn't always tell the full story. If you look beneath the surface, especially in the small cap and mid cap universe, the declines have been sharper and investor confidence has clearly taken a hit, which raises an important question for many investors. What does this mean for you as a small cap enthusiast? Is this the wrong time to enter the market? Should you wait on the sidelines until this uncertainty passes? To explore that question, I spoke with our small cap analyst, Richa Agarwal, and she made a very interesting observation. If you've been investing for a while, moments like this start to feel strangely familiar. Think back to some of the major crises investors have lived through over the past 2 decades. The 9/11 attacks in 2001, the global financial crisis in 2008, the COVID market crash in 2020, the Russia-Ukraine war, tariff shocks, and several geopolitical tensions along the way. Each of these moments felt deeply unsettling while we were living through them. After 9/11, global markets plunged and uncertainty was everywhere. In 2008, the Sensex fell more than 50%. During COVID, markets experienced one of the sharpest crashes in history. And yet, what happened afterwards? Markets adjusted. They repriced risk. Leadership shifted to new sectors and new companies. And eventually, recovery followed. In fact, when you look at the data across these crises, something fascinating emerges. Almost every major disruption was eventually followed by a new phase of opportunity for investors. That's because markets have a habit of doing three things. One, they adjust. Investors react to the shock and prices fall as uncertainty rises. Two, they reprice. Companies get valued again based on the new economic reality. Some sectors suffer while others start to look attractive. And thirdly, the markets move forward. New market leaders emerge, investor confidence returns, and the next phase of growth begins. Now, that doesn't mean volatility disappears overnight, and it certainly doesn't mean uncertainty goes away immediately. But history shows that panic rarely has been a wealth building strategy. For long-term investors who stay diversified and keep a clear perspective, periods like this often turn out to be turning points rather than endpoints. And right now, something similar may be happening beneath the surface of the market. Certain high-quality businesses, companies that looked expensive just a few months ago, are now trading at far more reasonable valuations. This is often how opportunity appears. Not when everything feels comfortable, but when sentiment is fragile and investors are distracted by fear. Which brings us to the focus of today's briefing. Because while the headlines are dominated by global uncertainty, there are certain smaller companies quietly positioned behind some of the most powerful trends shaping India's economy. These companies may not always be the obvious names investors talk about, but they often play a crucial role behind the scenes. In just a moment, Richa will walk you through how investors can identify these opportunities through what we call proxy investments. What exactly are proxy investments? And how they can help you uncover some of the hidden participants in major economic trends. Let's find out. Over to you, Richa.
Hello and welcome to today's video briefing. I'm Richa Agarwal, Small Cap Analyst at Equity Master, and today we are going to look at how proxy investing could help uncover lesser known stocks that play a key role in big economic trends. What is proxy investing? In simple terms, Proxy investing is when you invest not in the obvious companies leading a big trend, but in the smaller, behind the scenes companies that supply, support, or enable that trend to happen. For example, if you follow investing discussion groups and forums, it often seems like everybody is chasing the next big trend: AI, EVs, renewables. But what if the biggest winners are not the companies at the center of the trend, but the quiet, small cap companies powering it? Well, that is where the proxy investing comes into the picture. Instead of betting on the biggest companies that lead any particular trend, a proxy player invests in the companies that supply to, support, or enable that trend. And that is where the money is quietly made. The gold-plated history of proxy investing. To really grasp the power of proxy investing, you need to see how it was used across history to make money. One really interesting story is that of gold rush in the United States of America. Let me take you back to the mid-1800s. News breaks out. Gold has been discovered in California. Almost overnight, thousands of people from all over the country pack up their lives and rush west, chasing the dream of striking it rich. Everybody wants to be a gold miner. But here is what most people didn't realize. Very few miners actually got rich. Most of them spent everything they had on mining tools and supplies, toiled for months, and found little or nothing. So who walked away with the real money? It wasn't the miners. It was the merchants who sold the miners the tools, supplies, and the utilities they needed: the picks and shovels, the tents and boots, and the foods and supplies. Business owners like Levi Strauss, who sold sturdy jeans to miners, became millionaires. Hardware store owners, blacksmiths, and tool suppliers, they profited steadily, safely, and massively from the gold rush without digging an ounce of gold themselves. This is the heart of proxy investing. Instead of chasing the gold directly, you invest in the companies that drive the rush. These are the investments that win no matter who finds gold. Getting the most out of proxy plays. When looking for proxy plays, a good strategy is to focus on small cap stocks. Why? Well, it's because small cap stocks typically have greater runway for growth as compared to large caps or mid caps. This means that if an investor buys a small cap stock at an early stage of its life, it has far more potential to grow than a big, established company that has already seen most of its growth. Now, investing in high-quality small caps is in itself an incredibly lucrative way to approach the stock market. But when combined with the idea of proxy investing, it becomes even more powerful. Why small cap proxy stocks are a smart way to invest? Well, the logic here is straightforward. When you invest in frontline players like the big-name companies leading a major trend, think EV manufacturers or renewable energy giants, you are betting on the outcome of a specific race. If those companies succeed, you succeed. But what if they don't? Or what if the market crashes and new competitors emerge? With proxy investing, you're not betting on a single company to win. You are betting on the entire trend. The small, behind-the-scenes companies you invest are integral to the trend itself. They supply the components, tools, or services that everyone in the industry relies on. For example, let us say the trend is electric vehicles. While everyone is looking at the EV manufacturers, the less glamorous proxy players making batteries, chemicals, and components are essential to the industry's success. Whether one EV company thrives while another one falters, the small cap proxy companies that serve these EV businesses keep profiting because the demand for their products and services does not change based on a single company's success. In short, no matter who wins the trend, these businesses make money. Let me show you a real-world example of this in the Indian stock market. How a proxy play in the airline industry could have led to major gains. Let's go back in time to 2009 and look at the airline industry. This was a time when the aviation sector was in a phase of rapid growth. You might remember this as a time when air travel became a lot more accessible to the masses. The number of people traveling by air during the late 2000s was higher than it had been in the history, both in number and in frequency. Now, normally, in such a situation, The average investor would likely look at a leading airline stock like Jet Airways to play this trend. But let us take a look at how this stock performed since 2009. Here you can see Jet Airways share price fluctuating drastically over the years and eventually hitting a mostly flat patch since 2020. This stock has been a highly risky short-term play at best and an absolutely disastrous bet over the long term. Presently, this company is not even in operations and has little scope of rescue or recovery. Let us now compare that to the proxy investing alternative in Excelia Solutions. Excelia Solutions was a small software company based in Mumbai and Pune and a niche IT service provider to the aviation industry. You see, despite Excelia Solutions being a relatively small company, it developed several IT products which are critical for global airlines like software for revenue accounting, billing, audits, cargo handling, and so on. Excelia would lease these products to various global airlines on a pay-per-use model, which means that the airlines could use these products and Excelia Solutions would handle all their backend services. This model worked out well for both the parties, and Excelia Solutions in particular stood to benefit from the stable revenue stream it was getting from its airline clients. A revenue stream that would only go up with the increase in the number of passengers and the frequency of flights. In addition to this, Excelia Solutions had forged long-term relationships with clients like US Air, Thai Airways, Gulf Air, Air Canada, Etihad, and Cathay Pacific. It also developed a strategic alliance with the International Air Transport Association, a central body for airlines across the world. All these factors made this little-known stock a powerful player in the India's aviation sector, which is precisely why Excelia Solutions grew by over 6,700% from 2009 to 2024. This is beyond impressive, especially when you consider how Jet Airways, a major airline stock at the center of this trend, declined over the same period. When you get into a proxy play at the right time, before the market catches on, the outcome can often be rewarding. Take this example of this exciting tech play that tapped into India's defense boom. The proxy on India's defense and aerospace sector that soared to astronomical heights. Over the past 5 years, India's defense and aerospace sectors have undergone a major revolution. You see, India defense relies heavily on imports. We have sourced small arms, missiles, tanks and artillery, naval warships, fighter jets, helicopters, and all sorts of defense technology from countries like Russia, France, US, and even Israel. But of late, India has been pushing for a new trend in its defense ecosystem, self-sufficiency through indigenous production, local innovation, and domestic capability building. Over the past few years, the DRDO's project pipeline has multiplied and the government has doubled down on the Make in India push for defense technology. Naturally, as this transformation gathered steam, the markets responded. Big players like Bharat Dynamics Limited and Bharat Heavy Electricals Limited became the go-to choices for investors looking to ride this boom. After all, these companies are directly involved in the game. Bharat Dynamics builds guided missiles, underwater weapons, airborne products, and allied defense equipment for the Indian Armed Forces, while BHEL supplies critical systems for naval vessels, including artillery and missile platforms. Both are critical in India's military-industrial complex, and between 2020 to 2025, their stock performance reflected that. Bharat Dynamics surged nearly 8 times, while BHEL delivered a solid 5 times return. Now, there is no denying that the gains like these are impressive by any standard. But when you look at a lesser-known proxy play like Aventel, you get a real sense of the hidden opportunities that lurk beneath the surface of the big trends like these. Unlike BDL or BHEL, Aventel is not a frontline operator in the production of tanks, jets, or destroyers. Instead, it builds the systems that make these machines intelligent, connected, and lethal. From satellite communication modules to software-defined radios, from electronic warfare subsystems to components used in small satellites, Aventel is a silent enabler behind the scenes. It builds the signal pathways, the communication backbones, the radars and the relay systems that allow India's defense forces to operate with speed, accuracy, and real-time intelligence. And while many investors may not have spotted Aventel, because they were too focused on the obvious players leading the trend. Aventel's numbers speak for itself. Between FY20 and FY 2025, the company's revenue grew over 4 times. Its profits grew over 5x. And its shares, the stock price soared by more than 2300%. That is enough to grow every rupees 10,000 invested into rupees 2,40,000. You see, proxy plays like Aventel often operate in the supply chains of the major trends. They rarely make headlines, yet they are essential to the ecosystem. This is actually what makes them valuable to those paying attention, especially the savvy small cap investor. Stocks like these benefit from lower investor scrutiny, more headroom for growth, and the potential for valuation re-rating as the wider market and institutional investors eventually catch on. When this happens, the perceived value increases in the eyes of investors, and as a result, the company gets more attention and more investors jump in, which pushes up the stock price, which in turn causes even more investors to buy at higher prices because they all want a piece of the profit pie in this rising stock. This is great news for the savvy investor who got in at an early stage before the market rush began. Now, when you hear the stories of stocks like Excelia and Aventel, you might feel that you have missed out and that the chance to get into such lucrative stocks has gone by. But don't worry, the market is brimming with proxy opportunities, and if you know what to look for, you will understand that the potential is huge. In fact, I am going to show you a trend which is currently playing out and show you the proxy stock which is tied to it. Beneath the surface of India's factory boom, a proxy play on the rise of domestic manufacturing. India's ambition to become a global manufacturing giant is no longer just a policy dream. It's a reality that is under construction, quite literally. Here is what I mean. Across the country, we are seeing new industries rapidly come up. Battery plants, EV factories, electronics assembly lines, and even India's first semiconductor plant coming up in Gujarat. These are real, tangible facilities and factories that are powering India into a new era of growth and development. And while headlines chase the big names making the chips or the batteries, as a proxy investing enthusiast, the real question that needs to be asked is, who is building the factories? That is where Entourage Building Products comes in. This is just one of the few promising players quietly powering India's manufacturing leap from the ground up. Entourage specializes in pre-engineered buildings or PEBs and uses modular construction technology. In simple terms, they make different parts of a building in a factory, walls, ceilings, beams, and sometimes the entire rooms, and then bring them on site and put them together like Lego pieces. Thanks to this technology, companies can now get a complete manufacturing facility in just hours or days instead of waiting for years, and that too customized to their needs. Now, this is a revolutionary concept that has been in advanced countries for years, and I'm sure you have seen videos of it online. But it has finally come to India, and the opportunity is worth looking into. Think about it. India's manufacturing drive is backed by government schemes like PLI or production link incentives, geopolitical scenarios which gave rise to China Plus One strategy, a rise in infrastructure capex, and a push towards clean technology and green industry zones. All of these are major initiatives that require a massive, sustained demand for industrial infrastructure. It's not a short-term play, it's a decade-long trend in the making. And the companies like Entourage, well, they are in the right place to grow as a whole manufacturing industry grows without being dependent on the success of a single company. From Amazon and Tata to Flipkart and green energy startups, Entourage client list has its building for the biggest. This company, which got listed relatively recently, clocked a turnover of Rs 1293 crore in FY24, and its management is targeting a turnover of Rs 2500 crore by 2028. Now do note, I am not giving you a recommendation or opinion on these companies. It is just worth keeping an eye on this trend and the players involved. Tech upgrades have created massive wealth in many sectors across India, and construction would be next. In fact, let me give you the inside scoop on 3 more trends to watch out for in the proxy investing space. These trends hold the potential to bring forward lucrative proxy opportunities for the discerning investor. Throughout this briefing, I have encouraged you to look beyond the surface and notice the silent enablers that power a trend from behind the scenes. As I unpack each trend to watch out for in the moments ahead, make it a point to ask yourself, which investment-worthy businesses could be silently powering this trend? And without further ado, let's take a look at the first big trend I'm keeping a very close eye on: Make in India and the push for indigenous manufacturing. You have definitely heard of this Make in India push, so this might not come as a surprise. But chances are you're not fully aware of the scope of it or the many opportunities that are quietly forming underneath it. Over the past few years, India has been serving a massive policy-driven shift, one that is supercharging the manufacturing scene at home, cutting dependency on imports, and pushing India to become a global production powerhouse. You have already seen this at play in the defense sector with more local production of weapons, equipments, and systems, and the opening doors for small companies like Aventel that supply critical components or technology. But there is also another fascinating market tied to this trend: India's space tech story. With ISRO's commercial arm opening up and private space startups now being backed, we are seeing small manufacturing firms break into high-tech aerospace components, launch systems, and more. And you have already seen how it has led to an increased demand for infrastructure, because with an increased push for domestic manufacturing comes a greater need for factories, which in turn needs roads, power, water, storage, and housing. And this feeds into companies which are tied to construction, engineering, and the utilities ecosystem. So, on a grand scale, we are looking at a web of proxy opportunities that are all connected to Make in India and the indigenous manufacturing push. Many of these proxy investing companies are small, relatively unknown, and are yet to catch the attention of the institutional money. But as I have shown you so far, that is where the opportunity lies for the discerning proxy investor. Going forward, I highly encourage you to approach any Make in India manufacturing story with a proxy investing lens that asks, who are the quiet enablers behind this trend? Next, let's take a look at another trend that I've been keenly following of late: India's power move on energy transmission. This is a niche trend that is relatively unglamorous when compared to defense, space tech, and EVs, so it may be easy to miss. But this is one trend that could uncover rich proxy opportunities for the discerning investor. First of all, let's get the obvious question out of the way: what is the energy or power transmission? Simply put, power transmission is the process of moving electricity from where it is generated to where it is actually needed. Think about a power generation plant, a windmill farm, or a solar energy park generating huge amounts of power. Once this energy is generated, it doesn't just sit there in the power plant. It needs to be sent across hundreds, sometimes even thousands of kilometers for use in homes, offices, factories, and more. And to do that, the nation needs an efficient power transmission system, which is being brought into motion with the National Electricity Plan between 2023 to 2032. This plan aims to expand the power transmission network, which in turn allows electricity to be sent much farther across the country, powering even more cities, villages, and the developmental projects. The plan also focuses on connecting renewables energy and green hydrogen projects to the power grid. It's a massive opportunity with investments expected to exceed Rs 9 lakh crore. I'm particularly keeping an eye on the renewable energy aspect of this trend, and I expect it to bring forward a few niche proxy opportunities. Now there is yet another trend that has been specially worth noting. This is probably something even you have noticed over the years: the rise of affluent India and how premiumization is changing spending habits. If you're 30 or above, chances are you have already seen it happening. Slowly but unmistakably, the rise of affluent India. Think about it. A few years ago, owning premium gadgets, fine dining, driving a high-end SUV, and going for an international trip, or even shopping for global brands felt like something only a few privileged could afford. Today, this lifestyle is becoming a lot more accessible. What was once considered luxury is now well within the reach of India's growing middle class, a middle class that is not just growing in size, but also in aspiration and spending power. From consumer electronics and international travel to fine dining and high-end fashion, everything is getting premiumized. And global brands have taken note. They are not just entering India anymore, they are doubling down on it. Because India is no longer just a volume market, it is rapidly becoming a value market. But the story doesn't end with the consumption. We are seeing the rise of financial affluence too. In just a few short years, demat accounts have exploded in number. Mutual fund participation has surged and SIP inflows are breaking records. Millions of Indians are beginning to enter the markets. They are actively investing at a scale that is unprecedented. People are not just spending more, they are also investing more for future consumption. And here is the best part. India is still young. With a demographic tailwind and rising incomes, this shift is only going to accelerate. As an investor, you don't need to own a luxury brand or run a financial firm to ride this wave. There is a whole basket of proxy plays, companies and sectors that are quietly positioned to profit from this trend. And when you approach the market through the lens of a proxy investor, the possibilities are seemingly endless. I'm sure this briefing has opened you to a new way of looking at any trend that occurs in the economy. With every trend you see unfolding, ask, who is really enabling this from behind the scenes? That one simple question alone could make all the difference to your investing journey from here on. As always, you can count on us to give you the inside scoop as we uncover such opportunities. In fact, if you would like proxy recommendations in the small cap space without having to go through the trouble of doing all the research yourself, pay close attention to the upcoming message from my colleague Tripti. Over to you, Tripti.
Thank you, Richa, for all the detailed insight you shared on proxy investing. And a big thank you to our viewers too for being a part of this briefing. I'm Tripti David, Equity Master's Chief Operating Officer, and I've got an exciting offer for you today. If you feel like you've gained genuine value from Richa's briefing and you want to take the next step forward and receive high-quality small-cap stock recommendations from her every month, I'd like to invite you to join her small-cap recommendation service. As a member of this service, you get direct access to Richa's small-cap stock recommendations over the next 12 months. And many of these recommendations will be proxy stocks that tie into major trends Richa has been tracking. Over the years, Richa's recommendations have brought value to several Equity Master subscribers, many of whom have written in to express their gratitude to her, like Mr. Sandeep, who says Richa's research helps build conviction when small cap investing. Or Mr. Sushil, who says Richa's analysis is quite extensive and gives deep insights about the company and its future. There's even another subscriber who says Richa's recommendations were based on solid research and suitable for an aggressive investor. If you'd like to join Richa's subscribers in her inner circle and tap into the immense potential within proxy investing, I highly recommend you sign up for her recommendation service today. Once you join, you will gain access to a special report titled 3 Stocks Powering Major Growth Trends. Each stock in this report comes with a complete analysis on why it could be worthwhile investment. You get full details on the parameters Richa has evaluated, the health of the business, its financials, and more. As a safeguard against any stocks running up suddenly before you can act on it, we will be giving you one extra stock in this report. Here's a sneak peek into each stock contained in this report. Small cap stock number 1, a strong play on the infrastructure and manufacturing cycle. This small cap company is quietly powering India's infrastructure boom. The company enjoys the status of offering first in the market products and enjoys market leadership in its niche. Recently, it has announced some positive developments in the business related to defense sector, unlocking an entirely new growth frontier. Richa expects it to be a big winner for the decade. Small cap stock number 2, a niche play on India's sustainable economy trend. This small cap company is emerging as a serious player in the sustainable economy and enjoys over 50% market share in a niche segment in India that benefits from the urbanization trend. The company has successfully extended its value proposition to multiple sectors in the economy and is expanding business globally. The government's mandates towards environmental sensitivity has put strong tailwinds for its business. With a strong balance sheet and healthy return ratio, this company is laying the blueprint for sensible and successful growth. Small cap stock number 3, the behind-the-scenes company closely linked to India's growth. This small cap company caters to a wide range of industries that are closely linked to India's growth story. Its products and services are critical for the rise of green energy in India. After establishing itself as a market leader within India, it is now going global, unleashing some interesting growth frontiers and adjacencies. As per Richa's research, this could be worthwhile play to consider. Small cap stock number 4, a leading player in an under-penetrated market. This is a business operating in the entertainment space and has been seeing increased collaboration with state governments to fuel expansion. It has been in operation for over 2 decades, giving it a strong hold in its respective industry, which makes it all the more difficult for new competitors to enter and displace it. The company also intends to increase income from segments like food and beverages that could closely tie into the entertainment industry. As India continues to see growing urbanization, rising consumerism, and an ever-ambitious middle class that are more keen on indulging in entertainment, this company could be for good growth in the years ahead. To access this report, all you need to do is join Richa's research service. Here's everything you get when you join our small cap research. Emerging Giants, how to spot great small caps early. This guide explains Richa's process of finding great companies in the making. She highlights the important parameters she looks at when evaluating whether or not a company is worth investing in. This guide is a useful starting point for anyone looking to get into small cap investing, as it prepares you for what to expect and the kind of research that goes into finding a quality stock play. A new small cap research report every month. Each month, we'll alert you to a compelling small cap opportunity through our detailed research report. In this report, you'll learn why the stock is on our radar, whether it looks attractive at its current price or at a lower level, the full investment rationale behind the company. You will also receive a monthly list of top small cap stocks worth considering based on current market conditions. Plus, you also get monthly updates. Until a stock reaches its target price, we publish regular monthly and quarterly updates on all open positions. This means you will always know exactly where your recommended stock stands through our monthly performance review. This report includes updates on every small cap stock that's still below its target price, how each stock has performed since it was first recommended, whether we continue to maintain our original view. This report is one of the most important parts of the service. It helps you understand the reason behind any hold or sell decisions and keeps you fully informed on how the recommendations are progressing. Special alerts. We don't recommend a small cap stock and then leave you on your own. Every recommendation is tracked until Richa decides it's time to exit and book profits. When that moment comes, you'll receive an instant sell alert straight to your email. And if there's any important update or development you need to know about a stock, Richa will send a special alert directly to your inbox. Research archives. Once you subscribe, you'll get full access to all past issues recommendations and the complete performance track record. You'll also be able to review every open actionable recommendations we've made so far, along with the new monthly research report you receive as part of your subscription. You also get 24/7 access to a members-only website. You can log in to your members only portal on the Equity Master website anytime to read every report. Go through all past newsletter issues. Review every recommendation or raise any concern about your membership. Equity Master's Private Briefing. The Private Briefing is a weekly newsletter that gives you a roundup of our best research published during the week. However, the Private Briefing isn't just about compiling everything in one place. If we have met any companies lately, or if there's some interesting discussion going on within our research team with regards to some company, we also tell you about it in the Private Briefing. Private Briefing is available exclusively only to premium members of Equity Master, and when you join today, you get access to this newsletter. Equity Master's Intelligent Portfolio Tracker. With our Intelligent Portfolio Tracker, you get an intuitive tool to not only track your investments but also be a part of a larger user community that gives you insights on the top stocks held by most other portfolio tracker users, stocks where users are increasing or decreasing stake, and sectorial allocation trends. Equity Master on the go. Now you can access Equity Master on your Android smartphones through our mobile app as well. Through the app, you can access the latest research reports, stock updates, all our e-newsletters, all other subscriber features on the go. A dedicated customer service team. If you ever have questions about your membership, simply send our customer service team an email. They will get back to you at the earliest and walk you through whatever you need. When you are investing in small caps, the difference between acting early on the right opportunity and missing it altogether can be significant. And having structured research, ongoing tracking, and disciplined exit alerts isn't just convenient, it can completely change how you participate in this segment of the market. This is why research like ours is so valuable to our subscribers. We have Ms. Manisha Shelar, who wrote in saying she makes good profits on a regular basis. After my association with Equity Master, I have started understanding the market in greater detail and make good profits on regular basis. Not only is the success rate on your calls very good, you are also approachable and helpful regarding any doubts about the market. Mr. Pankaj Verma, who said, my entire portfolio is doing very well and I am very happy with your recommendations. Equity Master has worked for me. Give it a try. And Ms. Srimati Ramachandran, who said her life has changed for the better since subscribing. This is trusted stock recommendation service. My life has changed far better since subscribing. I've made reasonable gains on many stock recommended. So if you are ready to join them and begin benefiting from our research, let's talk about how much does Richa's small cap research cost. Now, ordinarily, a one-year subscription to Richa's small cap research is priced at Rs 10,000. And when you consider everything included, the detailed monthly reports, continuous updates, sell alerts, full research archives, and access to premium briefings, that price reflects the depth and time-intensive nature of the work involved. However, under this special offer, you won't be paying Rs 10,000. You can join today for just Rs 2,950. That's a saving of over 70% on the regular annual price. If you look at it practically, that works out to just a little over Rs 8 per day for an entire year of structured small cap research and ongoing guidance. When you think about the scale of opportunity in the small cap space, that's a very modest commitment for access to disciplined research-backed recommendations. What's more, when you join today, this amount you spend is completely covered by our 30-day refund guarantee. I know that subscribing to a research service isn't something you do casually. Even at this discounted price, you're trusting us with your money, and that matters. That's why your subscription is backed by a 30-day 100% refund guarantee. You can go through the reports, review the logic behind the recommendations, study the updates, and evaluate the service for yourself. If within 30 days you decide it's not the right fit, simply reach out to us and we'll refund the full amount you paid. So there's no financial risk in trying the service, only the opportunity to evaluate it properly. This is a time-sensitive offer. If you want to access Richa's report and get this 70% discount and report she has prepared, you need to act quick, because we are only keeping this offer open until 27th March. After that, we'll take it down and there's no guarantee when you'll see such a good discount again. Right now, you have no reason to let this offer pass by you. You've seen the potential within proxy investing. You've heard about the promising sectors Richa has been keeping track of in the small cap space. And you're probably ready to get actionable stock recommendations from her every month on such small caps. All that's left is for you to take us up on this incredible offer we've prepared for you. Go ahead and start your journey with high quality small cap stocks. If you're ready to get started with our small cap research, go ahead and click the subscribe now button in the description below. When you join, you'll have Richa's report delivered to your inbox along with details on how to access your membership portal on our website. We look forward to guiding you with our research. Happy investing!